go there faster?
So first and foremost, after the 1920 crisis in the world, after the First World War, the American economy just grew on the back of infrastructure. So I'm a great believer that infrastructure is really the key. And there's a huge need for quality infrastructure, building up that capacity to be able to drive and operate and maintain it well. So infrastructure will be really the key. But there are a whole range of new areas of growth. We've been focusing on sunset areas. We are now getting into sunrise areas. If you look at the production-linked incentive scheme, that looks at some of these areas. Mobile manufacturing, electronic, advanced chemistry cell, battery storage, network industries, that is components getting into telecom and automobile, this huge shift from combustion engine to electric vehicles. And you'd be really surprised to know that this year, actually, the world has sold more mobile. The sales of mobiles is more than the number of total value of sales of cars. So there's a huge shift taking place towards these items. We need to penetrate this global market in this, not just for the domestic market, but use the strength of the domestic market to penetrate global markets.
You spoke about CapEx, Mr. Kant, and the government, of course, this is a huge thrust. They've talked about CapEx in a massive way. They've increased the outlay. Now, the big problem sometimes with CapEx is while there are the outlay announcements, actual CapEx does not follow. Expenditure tends to lag behind, as we've seen last year, a year before, because of COVID, of course. But there are other reasons why. What are the key reasons you think why this is happening? And do you think that this CapEx push will actually crowd in private investment as you hope?
So I think that's a very important question, because important thing about CapEx is that you need to be ready with the projects. You need to put shovel to the ground. And therefore, there's a challenge for everybody in the system, really. If the budget talks about a 4.1% GDP for CapEx, that means every single department of the government, roads, railways, all these sectors need to be ready with land. They need to be ready with environment approvals. They need to be ready with all the possible approvals and get it cracking. They shouldn't be waiting for the last quarter of the year, but it's a challenge to all of us to really deliver projects on ground. And more than that, there's a huge, huge challenge to the states. If you're working with cooperative and competitive federalism, there's a massive challenge to the states of India to drive growth on the back of this capital expenditure. And more important than that, is to crowd in private sector investment means that you should be able to structure projects which are commercially viable and doable. That means you should be able to put users' fee, you should be able to put out projects into the market, and therefore bring in private sector investment. And therefore the government strategy for asset monetization is the right strategy, actually, that there are well-functioning good projects. There are airports, there are a whole range of roads which have already been constructed. These are all functional projects. Bring in the private sector, get them to operate and maintain, they'll bring in efficiency, and then they'll bring in the private debt. Because you need to raise corporate bonds, you need to raise much larger level of debt, because the private debt in India is extremely, extremely low, unlike the government sector. And the private debt has to be raised from the present 55% to at least 100%. And therefore, there's a massive opportunity on well-functional. These are all de-risk projects where private sector can come in and operate and maintain. And that is what the government strategy is through the asset monetization plan of 6 lakh crores.
Now, you've been a key driver of the asset monetization plan. We've had the 6 lakh crore number, of course, and the 80,000, 88,000 odd crore for this fiscal. Where do you think we'll end up this fiscal, and how do you think that's going? Tell us a little more, because we believe that, the asset monetization, like you said, could be a key driver of generating employments and growth. But is it happening?
So by 24-25, we have a target of 6 lakh crores. This year's target is 88,000 crores. We are absolutely confident of achieving and surpassing that. And this is largely because of the achievement in road side, power side. We've done extremely well on coal. on mining and city gas distribution. So while some sectors have not performed so well, all other sectors have taken the lead and moved forward. So I'm extremely confident that we'll achieve this year's target of 88,000 crores. Now this money is supposed to go back to the institutions so that they can create new infra. It's not meant for the budget, it's meant for these organizations so that they bring in private sector efficiency in operation and maintenance, but these institutions then use these resources to create new and new infrastructure and again get private sector. So you create a virtuous cycle of private sector management, bringing in better operation and efficiency into the system. Why should government be managing pipelines? Why should the government be doing roads, operation and maintenance? Why should the government run a Shoka hotel? These are the questions, and that is what we've answered through the asset monetization pipeline.
Now, you said there are areas where you've seen success and there are areas where are you going to look at, because it's an ongoing process, it's over a period of time. Are you going to fine tune some aspects of the scheme and make it even more ambitious than it is to get more revenues in?
Depending on if once we achieve success, which I'm very confident of, and we are very close to it, of achieving, fulfilling and surpassing this year's target, I think we'll probably look at next year and probably add a few more assets into it and keep going ahead as we go. Fine-tuning is a day-to-day functioning of the government, and you should keep fine-tuning to achieve the end objective. And the end objective is that the private sector must run the economy of the country. The government should be basically a facilitator and a catalyst. Businesses must be run by businesses.
Talking about that, Mr. Kant, we come to the subject of disinvestment, where again, unfortunately, the report card hasn't been too great. I mean, at the end of this fiscal, we might end up with a better number than we are at the moment. But the next year's number, again, surprisingly, has been kept at 65,000 crore. Now, is that, do you think, a sort of signal that the government is now much more, wary of not overcommitting and underperforming, and rather keeping it sort of at manageable levels and then overperforming and on the upside? What do you think is the reason why the number has been reduced this year?
So sort of first, the most difficult of the disinvestments, that's Air India, has been done. And it's been done by taking a whole range of policy decisions. We've also had Neelachal Ispat, which has just been done. But in the coming year, you will have BPCL, BML, Concor, Shipping Corporation of India. Then you'll have last year's, if you read this year's budget in continuity with the last year's, you'll have 2 banks, 1 insurance companies. All of these recommendations have already been made. So they are all at fairly advanced level. And then you have the big mega LIC IPO. So I'm quite hopeful that while the government has been very conservative in the budget, and rightly so, I am quite hopeful that it will not only achieve it, but actually again exceed that target in this year's budget. So it's always better to be less ambitious and actually deliver more, which is what probably the government will do in the coming year.
So tell us a little more about the 2 banks and the insurance company. Where does that stand?
So, we are a recommending agency. The Niti Aayog makes the recommendations. So we've done the recommendations, and those are being discussed, debated, and being taken forward. So I would not like to give the names, but they are at fairly advanced stage.
But Air India was a different problem, which of course is a signal that the government has been able to take the bull by the horns and take a decision on that, which is commendable. But banks are a different ball game altogether, insurance in particularly as well. Now, how do you expect that will play out, in terms of opposition to it, etc.?
So sort of nothing is easy in India. I mean, you've had the Hindustan Zinc case being reopened for investigation after 25 years of its investigation. You had one of the hotels in Jodhpur being opened up for investigation after almost 2 decades. I mean, imagine people who'd actually done disinvestment. They've all retired and gone, and they're living on their pensions, and these cases getting opened up. So it's really, really tough. But government has pushed the limits on it. The political and the administrative will to drive it is there, which has been demonstrated, and we'll continue to pursue this with great vigor and energy.
Now, you spoke a little while earlier about the digital economy. Now, there is a 30% tax, which that's the elephant in the room we have to catch you on. There's the 30% tax which has been put on virtual digital assets. Now, there's no mention of the word cryptocurrency at all in the budget, in fact. And then there is the CBDC, which is being rolled or said to be rolled out next year. How do you react? I mean, you've spoken to Business Today in an earlier interview with us, saying, and very rightly so, that there has to be soft touch regulation because blockchain and the cryptocurrency is a reality, right? And not only that, I mean, about 2% of the population invests. You said in that interview, 2% of the population already invested with, and that's a large number. So where do you think this 30% tax comes from, and what was the thinking, you think, as the think tank of the government? Why was it done, and what's the road ahead?
I think sort of first and foremost, behind cryptos and digital currency, there's a blockchain technology. And the blockchain technology is real-time, it's highly transparent, and it's a very, very cutting-edge technology. One must understand that. Secondly, what the government has done is to say that India will probably be amongst the first few countries to have a digital currency. That means your paper currency would be replaced by the digital currency, which the RBI will come. That will be the currency of the country. In India's case, it's slightly different because in India, we already have the unified payment interface. We've made a lot of progress, so most of us actually use our mobile to do digital transactions already. India is way ahead. Now, what will happen is you will have the alternative of the digital currency, which will enable you to do both domestic and international payments of Indian rupee. But cryptos is like a virtual asset. It's like mutual fund. It's like gold. It's like bonds, which you and many others, including me, we procure. So crypto is another asset class. Now, this is a new asset class which has come up. And therefore, the government, many people were transacting through cryptos. Many people were buying and selling cryptos. The government was losing out on tax. And therefore, the government has imposed a 1% turnover tax on exchanges, and it has imposed a 30% tax. And that, to my mind, is the right policy regime to go and tax and get the revenue collections which you're losing on. You cannot ban crypto in isolation. You cannot, because it's a global phenomenon, and therefore you need global cooperation. Moreover, it's like saying that you're going to ban the internet. You can't ban the internet. It's like saying that you're going to ban, geographical maps because some terrorists are going to use it. You cannot do that. It's not possible. It'll also lead to flight of capital. Same people will go to Singapore or Dubai and start doing the same thing. It'll lead to flight of capital. It'll lead to flight of skilled manpower. There's a possibility that as we go ahead, you can make India the center of cutting-edge technology. And therefore, the right policy regime is to tax it and to make it, very transparent to everybody that we also have a turnover tax, and that's the way to go.
I think what you're saying is going to make a lot of crypto, the members of the crypto industry very happy, because this is exactly what we were discussing at a Facebook audio live in the morning. Because there's a lot of confusion around it. Do you think...
No, there's no confusion. The budget is very clear. 1% turnover tax, 30% tax.
No, the confusion is around whether it is going to be recognized as legal or not, because the law is still not out. That's the confusion. Where do you, so is that a signal? What you said, Mr. Kant, is very significant, because are you then saying that, of course, the government is going to recognize cryptocurrency, crypto assets as an asset class and regulate it, which the law will then come up with, and then tax it? It's taxed is already done. The law will follow. Are you saying that?
So government is in a mode of interacting, getting a feedback. Government is in a mode of discussing, and I think it will take a call in due course.
But you're not giving a straight answer.
Yeah, but the fact that the government has put a regulatory fee, the government has put a tax. I mean, you don't put a tax on, if it has put a tax, means that it's allowed that business to go on. And it is said that there's a certain tax component which will occur to the government.
But there are senior government officials who are saying that that is not that is no evidence that
maybe,
it will be legal.
But you'll see a clearer answer as we go along in due course.
And by when do you think that will happen?
I think government is still in a process of discussing, trying to understand the animal. It's a new animal across the world. A lot of new aspects of it are emerging on a daily basis abroad. I mean, you have NFT, you have many other new versions of things happening. I think we should look, my belief always is that you should do regulation with an innovation bias. We need to do regulation with a light touch.
Yeah, you've said that earlier, and yeah, that is what I guess the industry also will expect. Now, another important element of your mission at Niti Aayog, Mr. Kant, has always been this a move towards electric vehicles, the green agenda, and that's become so very important. Now, immediately the question arises is the battery swapping policy. When do you think we will see a clear policy, and what is the road ahead on that? Yeah. Tell us a little more.
Firstly, you'll have a battery swapping policy in the next 3 months. We are at an advanced stage. We've already come out with 12 standards already for electric batteries. We'll come out with a battery swapping standard in the next 60 days and a clear battery swapping policy in the next 90 days. But let me also tell you that the government has done an incredible lot. On electric vehicles. The Prime Minister had launched the MOVE Summit, and since then we've restructured the FAME 2 scheme, which has enabled electric two-wheelers and three-wheelers to become cheaper than combustion vehicle. So all the vehicles that are being now purchased are two-wheelers, three-wheelers, are all electric. We floated the biggest tender for electric buses for about close to 5,500 electric buses for 9 cities. And we've put out about 5,800 electric chargers are already operational. The petrol pumps are putting up another 2,200 of them, and we are pushing for fast charging so that every vehicle can get charged within minutes. That is our push for it. And we will ensure that we are able to create a grid for fast charging in this country. But battery swapping will enable you to split the vehicle between actual vehicle and the battery. So the battery will be 40% of the cost, vehicle will be 60% of the cost. So your vehicle will be easier and the battery will be interoperable. So one manufacturer to other, you can take the battery, swap it and put it in the vehicle. And that is the way to go for the country, to in a large, vast country like India, to rapidly spread the electric mobility movement in India.
And you're saying it will be out within the next 3 months?
Next 90 days.
Okay. Moving away a little bit from that, Mr. Kant, let's talk a little bit about agriculture. Now, we had the rolling back of the farm laws, which of course the government was very keen on. How do you then look at pushing technological advancements and reform among small farmers in the absence of these laws? What is the sort of plan B the government will now have to undertake on that front?
Oh, there's a lot of technological disruption happening in the field of agriculture, in procurement, in use of technology, in going organic and going natural, in the use of drones. So if you look around all these areas, there's a huge amount of disruption happening technologically. Moreover, there's one thing is absolutely clear, that it's not just agriculture which is critical, but it's horticulture, floriculture, animal husbandry, in all these areas where you have to enhance your productivity and actually ensure that the farmer earns far more from these other activities rather than just agriculture. The second key thing really is to cut down the water usage in agriculture. So moving away from large water consuming crops into areas which will give you much higher earnings is very, very important. Because otherwise you've reached a level of your going down into the soil where you're digging out uranium and you're exporting water rather than basmati rice. So it's very important that we do sensible agriculture, focus on value addition, focus on cold value chains, and focus on all these other allied activities as well to enhance the earnings of our farmers, and especially small farmers.
Coming back to the budget again, Mr. Kant, I mean, the finance minister is also spoken about, while pushing capex and expenditure, also sticking broadly to the fiscal glide path. Now, in the absence of private sector investments, but of course tax revenues are buoyant, but in the absence of adequate expenditure push, you spoke about the reasons why this could have happened. The real expenditure not happening. Where do you see we could end up with? Do you think the glide path, as we spoke of, is reasonable and we will be achieving it?
So the FMS talked about a movement from 6.9% to 6.4% next year, and a fiscal path which leads you to 4.5% by 25-26. I'm very hopeful of that. I'm very hopeful largely on account of the production-linked incentive schemes, which will push your manufacturing in a very big way. They're all linked to production. You enhance your production, you do greater sales, you get higher, you get that additional 5% bonus. If you don't do it, you won't get it. So we've had an excellent response on production-linked incentives. You look at advanced chemistry cell, we were focusing on 50 gigawatts. We've got 130 gigawatts. Electronic, mobile, automobile, we've got about 150 companies applying for it. So massive response to production-linked incentive. And that would really show. I mean, look at mobile, what's happened. 2014, we had just 2 companies manufacturing here. Today, you have 200 companies manufacturing here. You are exporting from India. So that is the story which will get replicated in automobile as we shift towards electric mobile. That will get replicated in battery storage. That will get replicated in solar PV. And that's the story. And backed with the PLI manufacturing drive, backed by good quality infrastructure, should really give you the bump up on exports in a very big way and ensure that you're able to get enhanced earnings, tax earnings, and I would expect GST's got heavily digitized. You've got customs, you've got GST, you've got income tax, all digitized, and therefore you're able to track down offenders. And secondly, as we go around enhancing our production and productivity, your tax revenues will be far more buoyant, and I expect the fiscal glide path to reach 4.5% by 25-26.
You spoke about automobiles. Where are we on the Tesla issue? I mean, when do we see a Tesla actually coming into India?
So the present policy allows Tesla to come in. There's no hindrance to Tesla coming in. Anybody can come in. Tesla's argument is, and there are 2 rates of duties, one at 110% for luxury vehicles, and about 60% for cars which are dismantled and brought here and assembled here. So the government's argument is that you can come in and use the 60% duty structure if you dismantle and do the assembly here. But what the government is keen on is that whatever we do, it should be linked to manufacturing in India. That's what China had done. So we are saying that do make in India of Tesla. We'll be very happy to assist and provide and support you with everything. Tesla is most welcome at 110% duty. It is welcome at lower rates of duties if it assembles in India. It is very welcome to do manufacturing, and that's what we are keen on. That whatever you do, manufacture in India and make that commitment.
So have things moved on that, or are we at the same?
Still at a level of debate and discussion.
Okay. So we are almost near the end of our time. I just wanted to ask you one last question. You've been speaking very passionately always about the startups and how, last year we've seen a huge number of unicorns coming into India, coming up from India. I wanted to understand from you, these are big names which have actually not done very well in the public markets. I mean, private market valuations vis-a-vis public markets. How do you see this dichotomy? Where do you think India's startup story, will head towards, as many of these unicorns head towards public markets to provide exit opportunities for existing investors?
So we've done very well as far as the Startup India movement is concerned. I had not anticipated in 2018 when we launched up the Startup India movement, and when it was launched by the Prime Minister, I had never envisaged that in such a short time we'll become the second or the third best ecosystem in the world. That's what we've done. We've created close to about 100 unicorns. We've created about 60,000 startups. But I think it's very important to understand that a lot of it is being driven digitally simply because every 3 seconds we are getting a new internet user. And actually, last year when we had 44 new unicorns at the peak of the COVID pandemic, it was a lot of digitization which was at play. And in the coming years, you'll see as the country expands its road path towards going green, you will see a lot of new unicorns coming up in cutting-edge emerging areas of sustainability as we go along. My view is that all these startups have done extremely well with investments from venture funds, from angel investors, many other. Now, going for an IPO issue, They've done well, but stock market is subject to going up, going down, and I'm quite sure that all these 3 or 4 startups which had gone through an IPO will, in the long run, all do extremely well. They'll create wealth for all those who've invested, including the middle class which is invested in them. You need to take a long-term perspective, not a short-term perspective. And in a long-term perspective, let me assure you that the story of the startups which have gone IPO has just begun. They will expand, they will grow, they will penetrate international markets, and their story will be a long-term story of growth and expansion.
So you don't think that there were some cases of them being overvalued in their private markets and therefore...
No, don't look at it from a present perspective. Look at it, every single investment that you make. And sort of you in particular, every single investment that you make in the stock market, take a long-term view, never a short-term, never a short-term perspective.
That problem doesn't arise for me.
So all the middle class and the lower middle class who have invested, I'm quite sure, will benefit by putting in resources into the startup movement of India. They will all do well in the long run.
And you think you continue to be bullish about the fact
I'm
that...
extremely bullish. I'm absolutely sure that Indian startup story has just begun. You'll see a lot of innovation happening in new areas of growth. You'll see this happening in education, learning outcomes. You'll see this in health startups. You'll see this. They are the ones who will transform agriculture sector, much like they are the ones who have pushed electric mobility in India. They challenge the established players. Actually, the startups really brought in investments. They got in new technology. Look at the size and scale of their ambition, each one of them. Look at Bounce, which did swapping. Look at Ather, which has done battery storage. Look at Ola, the biggest factory. They're the ones who've challenged all the established players. The same thing will happen in agriculture and all these areas. They are the ones who will cause disruption. They are the ones which will drive India's growth story in the coming years.
Mr. Amitabh Kant, you've, as always, spoken very passionately, very, very clearly about the road ahead. Thank you very much for joining us this afternoon, and I hope the audience here also enjoyed it, the viewers enjoyed it. Thank you very much.
Great pleasure. Wonderful interacting with you.
Thank you.